Well, good morning, everyone. I hope everyone's having a good first day here at the RSA conference. And thank you so much for joining us as we talk about this concept of a cyber risk appetite. My name is Matt Tolbert. I've been a cybersecurity practitioner for over 25 years. I've served as a Chief Information Security Officer, Technology Risk Officer, Management Consultant with a Big Four firm, and I currently serve with the Federal Reserve as a Senior Risk Specialist. And throughout my career, I've been focused on helping to try and advance our capabilities in terms of cyber risk analysis, cyber risk measurement, and as well as this topic too, in terms of how to effectively set expectations and communicate what's adequate or what's allowable in terms of risk-taking as an organization is pursuing its business goals. So before I get started, I do have to make a disclaimer statement, and that is that the views stated herein by me are those of the presenter, myself, and not necessarily those of the Federal Reserve Bank of Cleveland, of whom I work for, or the Board of Governors of the Federal Reserve System. And I appreciate being able to say this because this does allow me to share with all of you, what I've been learning recently and what I've been discussing with my colleagues and my peers with regards to cyber analysis, cyber risk metrics, and again, this concept of a cyber risk appetite. And one other thing I want to do to set everyone's expectations this morning, when you present at RSA, you go through a very rigorous vetting process. So this presentation had to be reviewed by a jury of peers, cyber experts associated with the RSA conference. I also had to have my management and experts within the Federal Reserve actually look at this presentation, not to mention our legal department. And if there was one consistent piece of feedback I got back from everyone, not to mention from Jack Jones, one of our thought leaders. Hopefully a lot of you know who Jack Jones is in terms of the father of open, fair risk analysis methods and a real thought leader in terms of cyber risk analysis. We'll be referring to some of Jack's work in our talk this morning. But the consistent feedback I received was, there's a lot of slides in your presentation. And it's true, you're going to see over 20 slides here. And typically when I present, I only do a few slides, if no slides at all. But what I was hoping to do with this deck that I'm sharing with you this morning is just to share with you information, insights, some example templates, hopefully things that you can take back with you to your organization to leverage if you decide to build or improve on a cyber risk appetite capability for your firm. So let's get started with just talking about the concept of risk appetite. Now, I got to believe with this audience, you probably know what a risk appetite is. In fact, I'm sure a lot of you have probably actually seen risk appetite statements in things like the annual reports of public companies, where they talk about essentially their extent of willingness to take risk in pursuing their business goals. Obviously, that's an important piece of information for a shareholder to understand in terms of the leverage or the extent of risk that the firm is taking, essentially with their investment. But just to make sure that I think we're all on the same page in terms of understanding what a risk appetite is, I just want to share with you, I think what seems to be the consensus on the definition of risk appetite, and that is a conveyed statement on the extent and type of risk, which essentially is tolerance, a firm is willing to take in order to achieve business objectives. And I want to focus on that word conveyed. I'll be talking quite a bit about that this morning, the importance of not just having a risk appetite statement and perhaps a cyber risk appetite statement, but conveying that effectively throughout the organization so it's clear to everyone in terms of what those expectations are. And there are certain benefits, of course, in terms of having a risk appetite statement. So, of course, it allows for senior management to efficiently and consistently make informed decisions because they know what the risk expectation taking requirements are for the firm, and especially in terms of making decisions on funding and resource allocation. Also, to make sure that it's clear between the board, between senior management and operational management of the firm in terms of, frankly, what's allowable or not allowable. So, for example, if a, say, business unit manager is deciding whether it's appropriate to start a new relationship with a third-party vendor for a critical service for the firm, or one of the big questions I think a lot of firms are facing, that question about what do we want to move to the cloud in terms of key services. Effective risk appetite will provide guidance and outlines in terms of whether that's something that's potentially acceptable or not in terms of making those types of decisions. And also, it's interesting, too, talking with my colleagues, when a firm has a risk appetite statement, And not to mention a more explicit risk appetite statement focusing, say, on cyber risk, and we're also starting to see firms adopt operational risk appetite statements and technology risk appetite statements. It's an indicator for outside parties to understand that there is essentially an information security governance program in place, and that management has taken the time to look at and understand its willingness to take risk in areas like cyber, operations, and technology. I was just talking the other week to a CISO of a large firm, and she was telling me that when she makes a decision whether to work with a new third party or not, and she has to do third-party due diligence, one of the questions she likes to ask that firm is, do you have a risk appetite? Or even better, do you have a cyber risk appetite statement that's been reviewed and approved and overseen by the board? Because when she hears the answer yes, that gives her a level of assurance that that firm has an information security risk management program that could at the very least be adequate in addressing cyber risk or risk in general. It's also, I think, interesting, too, that she does that because it's also a great way of understanding if that firm's risk appetite is the same as her own organization. So if you think about it, if you're a company that has a low tolerance for risk, and you at least see that a third party you want to work with has a similar risk appetite, low risk appetite for cyber risk, for example, that may potentially be a good partnership match. Versus the converse of that, in terms of you're partnering with a third party that basically is taking a lot of risk, say, to be innovative. That may be either something that would essentially not be a good relationship to establish, or you at least understand the risk that you're taking in terms of working with this third party. So I think that's one of the key value propositions we see about having a risk appetite statement. So now, a cyber risk appetite statement, we're seeing more and more firms starting to adopt cyber risk appetite statements. And hey, at this point, I want to pause and make something clear, especially for those of you in the banking industry. I had two CISOs come to me this morning saying that they were hoping to attend this presentation. And they asked the question, of course, well, hey, cyber risk appetite is a great concept, but are we required to do it because we're banks? Is there a regulation out there requiring us to have a cyber risk appetite? So I want to make it clear that at this point in time, there is not a regulatory requirement, certainly that I'm aware of, that requires the adoption of a cyber risk appetite or, say, an operational risk appetite or a technology risk appetite. There are requirements, and we'll talk a little bit about 12 CFR Part 30, that requires risk appetite in general, but there's no requirement as of yet. But still, we're seeing firms starting to adopt cyber risk appetite, not because they're required to, but because they see the value of having it and how it makes things much more efficient and effective in terms of strategic decision-making within not just the senior ranks of a company, but within the operational management ranks as well. And when you look at what a cyber risk appetite essentially consists of, when you look at essentially all the different ones that are out there right now, they pretty much have the same common kind of write-up, which is this, that has a statement that says the firm has a low or moderate or high tolerance for either the loss or breach of business, as well as customer information, or the disruption of operations. And by the way, for all of us, of course, being security professionals, it should sound familiar, that's CIA, confidentiality, integrity, availability. And of course, in pursuit of its business goals, key point. Now, again, we're starting to see a lot of firms adopt cyber risk appetites or risk appetite statements that are encompassing of cyber as well as operational risk. However, at this point, there really is no explicit guidance out there as to how a cyber risk appetite statement should be written. So we see a lot of diversity in terms of attempts and actual completed risk appetite, and especially cyber risk appetite statements. And that's certainly for the banking industry. Just out of curiosity with the audience, since I think we know now half of you are outside of the banking and financial services industry, just a quick check for other industries like telecommunications, energy. Does anyone know of any other explicit guidance or requirements for cyber risk appetite or operational risk appetite? I don't think so, but just checking with the audience here. Yes, sir.
Hi, I'm Brett Tucker. There's a standard I wrote, Octave Forte, through the Software Engineering Institute. It has direction on how to craft risk appetite statements and provides a template for doing so as well. So if anyone wants to look at that, I can provide that afterward.
Outstanding. That's the Software Engineering Institute. That's
Yes, sir. Carnegie Mellon.
It was going to say from Pittsburgh, right?
Yes, sir.
I'm from Pittsburgh, so we'll have to touch base afterwards.
It's a pleasure.
Yeah. All right, I have to say it because I'm from Pittsburgh. Go Steelers. Okay. So great. So, and one thing, actually, the gentleman brings up a good point. So there's no requirements per se, but we're seeing more and more guidance coming out. And actually, I'm glad you mentioned that because when I get to the reference slide in terms of basis for guidance on cyber risk appetite, I'll have to include that guidance from the Software Engineering Institute. Great. But when my peers and I look at what's currently out there in terms of cyber risk appetite statements, we sometimes have to ask if it's really adequate, if it's really, could it be considered an effective cyber risk appetite statement? Because we see sometimes problematic things with regards to how they're written, how information is conveyed. Sometimes they're too broad, sometimes they're very too specific, sometimes they're actually focused more on controls and actually achieving business goals and things like that. So we're seeing a variety of different problems, again, because there's really no, I think, standard out there, no actual standardized requirement for how to write a cyber risk appetite. So I think everyone is still trying to figure out the best way to write and create one effectively. And I think the common problem we see most in terms of cyber risk appetite statements is that they're just too broad and too generalized. So what you're looking at here, I think, is kind of an amalgamation of what my peers and I have seen. In terms of these cyber risk appetite statements, they essentially read like this. Our firm faces a range of risks reflecting its responsibilities as a major trusted global service provider organization. We take our important position seriously, et cetera, et cetera, et cetera. So if I was, say, the chief operating officer of a company, and I were to read this, here's the challenge. This conveys that, all right, I understand that leadership considers cyber risk to be important, but it's not conveying to me in this statement here exactly what I can and can't do. What are my guardrails? What's the level of risk I'm allowed to take in my level of responsibility? So I think that's the challenge that we see with a lot of our early attempts, especially at crafting cyber risk appetite statements. So what then is an effective cyber risk appetite? So keep in mind, again, there's no standard out there, but what I want to do is kind of represent, I think, where my peers and I have seen good examples of effective cyber risk appetite statements. And a couple of comments in terms of what you're looking at here. The first thing is, and I use the word in the title there, succinct, is succinct. We've seen cyber risk appetite statements that are sometimes 20 to 30 pages long. It's an actual document. And you honestly have to ask yourself, if you're conveying your cyber risk appetite statement essentially to your entire organization, is everyone going to take the time to actually methodically read through, say, 20 to 30 pages? Versus is succinctly captured in, say, 1 or 2 slides. Now, I want to give credit in part to what you're seeing here to our colleagues at the Office of the Comptroller of the Currency, part of the U.S. Treasury Department. Because if you were to Google OCC risk appetite, you'll actually see this approach that the OCC uses. They essentially have 2 slides that cover cyber and technology risk. And when you look at it, I mean, it really imparts to you in terms of, it very efficiently tells you, essentially, what's considered to be low tolerance in terms of cyber risk, what's moderate, and what's high. So the examples I hear, and again, this is not complete, but these are examples in terms of what, for example, your firm might go through and consider in terms of highlighting, and I'll emphasize this, scenarios. What scenarios essentially are to be considered allowable from a risk standpoint, and frankly, which should not. So hopefully you can see here in terms, I know the font's a little small on the screen here, but for low tolerance, I think some of these things are essentially common sense in terms of low tolerance for unauthorized access or release of sensitive information, low tolerance for the unrecoverable loss or the unrecoverable integrity of business data or software that's critical to operations and services. Non-compliance with laws and regulations, I think, is a given. But sometimes these scenarios can be interesting, like this next one here. Actually, second to last bullet there, which I can highlight. There we go, right here. Critical business applications reliant on any external technology platform and service provider. So this is an example of a cyber risk appetite statement where the firm has decided we do not essentially want to trust our critical operational services to a third party. We want to do it in-house. Other firms may consider something different. They may actually have a risk tolerance for outsourcing critical services and operations to a third party. The point is, in terms of when that decision is made, it gets captured in the cyber risk appetite statement. One of the other things, too, here in terms of what we see with these risk appetite statements is consistency with regards to low versus moderate versus high tolerance descriptions in the risk appetite statement. So starting with low, a low risk appetite statement, position, again going back to here. These are essentially, whoops, there we go. So these are essentially, in terms of low tolerance, these are risk scenarios to avoid. So in seeing, for example, this list here, again, if you and I were the chief operating officer of our firm, these are the types of risk scenarios that we essentially would want to avoid because leadership has decided this risk exposure is unacceptable. Versus moderate, where it's understood that there is risk in terms of these scenarios. But in pursuit of business goals, that risk will be taken, albeit ensuring that there are effective controls and processes in place to mitigate that risk. And then there's high, which means essentially management understands there's risk, but they believe that in the pursuit of business goals, they can just elect to accept the risk, especially if they've done risk analysis and determined that the risk exposure would not lead to any significant or material, say, financial losses to the firm. By the way, when I was showing this slide to Jack Jones, the original version had low or zero, because we have seen some risk appetite statements say zero risk tolerance. And Jack brought up a very good point, which is you probably don't want to use zero, because that could actually have legal implications to your firm, having zero versus low. Just out of curiosity, do we have any attorneys here in the audience? Okay. So I think one of the things that's always helpful is when you're doing a cyber risk appetite statement, you're going through the write-up, to have legal look at it, to look for those things like Jack pointed out in terms of certain language that you may want to not use because it has legal implications to it. So that's why I think we see low risk tolerance versus zero risk tolerance in these appetite statements. So hopefully this is making sense to everyone in terms of the value proposition of having a cyber risk appetite statement. With a risk appetite statement, in fact, I had to add the anchor because my colleagues often talk about risk appetite statements being the anchor from which you actually can then build and base your risk management program. But starting with the foundation of a cyber risk appetite statement, now you have essentially the guardrails and the guidance needed to build out your operational risk management program in terms of everything from understanding risk tolerance thresholds, reporting, KPIs, KRIs, KCIs, what priorities to give to certain risk assessments and risk analysis. So that all comes from essentially a well-crafted cyber risk appetite statement. And then once you have that operational risk management program in place, now you've enabled leadership to be more efficient in making decisions, which could be, again, working with a third party, outsourcing services, going to the cloud, those types of key things that can have significant cyber risk implications. And then, of course, once those decisions are made, if you're a chief information security officer, and again, quick check, how many of you serve as a CISO here in the room? Okay, good amount, that's great. So this is one of the things I've heard from CISOs. Once a risk appetite statement has been put in place, it makes their job a lot easier because now they can focus the information security program on supporting the business units in complying with risk appetite thresholds and considerations, including cyber risk appetite considerations, and better align the security program to meet business goals and objectives. And then, of course, that leads into selecting information security controls, prioritizing controls to, again, support the business in meeting its goals of addressing cyber risk appetite. So hopefully this is making sense in terms of the value proposition of having a cyber risk appetite statement or a risk appetite statement that encompasses cyber risk considerations. So let's talk now a little bit in terms of actually establishing a cyber risk appetite statement. What's the process? What things need to be factored into it? So first of all, I want to share with you just some of the basis work that's been out there. This is kind of the go-to guidance, especially for anyone who's in the banking and financial industry, in terms of risk appetite considerations, and also that can lend to developing cyber risk appetite. And again, I wish I could add the Software Engineering Institute's new guidance. I'll certainly do that. So be aware that SEI also has new guidance apparently out there. But of course, you can certainly start with the ISO 31000 risk management standard, especially if you're a company from outside the United States or you're international in stature. Within the banking industry, there are SR guidance as well as 12 CFR Part 30, which we'll talk about in a little bit, focusing on expectations in terms of risk appetite that could factor into cyber risk appetite statements. And some other work there too, but I think the two I really want to focus on and make everyone aware of are these two. First of all, you should be aware that the National Institute of Standards and Technology, in just the past year, has come out with new guidance. This is IR 8286 on integrating cybersecurity and enterprise risk management. And what's interesting about this guidance document is it refers not only just to risk appetite, but it starts to refer to cyber risk appetite. Although it's still not explicit in terms of requiring certain things in terms of what should be in a cyber risk appetite statement, thresholds and things like that. But it's always interesting to see what NIST is coming out with, because I think those of us who have been in security for a while know that eventually when regulations come out, new laws come out. I think we've seen this already with GLBA. We've seen this with HIPAA. Those regulations, those guidance, the basis for that comes from essentially NIST guidance, traditionally. So I would encourage you to look at the NIST IR 8286. Some really interesting insights there in terms of expectations, not to mention some helpful things like standardizing nomenclature associated with risk appetite, risk analysis, risk thresholds, those types of things. And then also I want to share with everyone too that Jack Jones was actually here at the RSA conference back in 2019 and also had given a talk about cyber risk appetite where he really conveyed, because this is Jack, he's a visionary cyber risk specialist, he conveyed a lot of the key principles to take into account for building a cyber risk appetite statement. So I encourage you, if you have the opportunity to do so, to look at Jack's talk from back in 2019. So I want to highlight 12 CFR Part 30. Now this is a regulation pertinent to the banking industry, but what's interesting about it was that when it was established, it provided a lot of helpful guidance in terms of how to successfully implement a risk appetite program that you could certainly convey into implementing a cyber risk appetite statement and capability. 12 CFR Part 30 answers some key questions like who owns the cyber risk appetite? How often should the cyber risk appetite be reviewed and approved, particularly by the board of directors? How often should management report on adherence to cyber risk appetite? So 12 CFR Part 30 conveys all those expectations. Now again, 12 CFR Part 30 does this just for risk appetite in general, not specifically for cyber risk appetite. But if you have that question in terms of how frequently should I be reporting to, say, the board on adherence, 12 CFR Part 30, I think, has some of those answers that might be a basis for you to make your own decisions in terms of things like frequency of reporting, who should be doing the reporting, what to look at. And if there is a consensus out there in terms of who should own the cyber risk appetite, or risk appetite in general, for those of you from a public company that have a board of directors, ownership of the risk appetite and probably the cyber risk appetite would be with the board. And it's really, well, let me put it to you this way. It's interesting when you look at how cyber risk appetites have been established in firms in terms of the board's role. So the boards typically do not start everything from scratch and develop the cyber risk appetite by themselves. It actually instead starts typically with a discussion between the board and the leadership, of which usually the chief information security officer, the chief information officer, and the chief risk officer weigh in terms of the value proposition of having a cyber risk appetite statement, or a broader, say, technology and operational risk appetite statement. So it usually starts with these rounds of discussions about the value proposition, and then the board agrees and asks senior management to then start to actually develop a risk appetite statement with thresholds and metrics and things like that to be presented to the board for their approval. So the board essentially does not do all the work up front. That's management's responsibility. But it is the board's responsibility ultimately to adopt and approve the final version of the risk appetite statement, including a cyber risk appetite statement. And it really should reflect the board's thinking and its willingness to accept risk to a certain extent to achieve business goals and pursue value. It's also the board's responsibility to make sure that the risk appetite statement is reviewed and updated, especially if conditions change. Say, for example, the firm wants to acquire another firm. That would probably make significant changes apparent. That would have to be reflected in terms of risk position and risk considerations. So you would want to basically consider and revisit, say, your risk appetite statements, your scenarios, and all your thresholds if you have that kind of significant event happening with your firm. And then, of course, the board holds management accountable for risk appetite adherence, including management reporting to the board when risk appetite is not adhered to, if risk appetite is being exceeded or not within the firm. And again, on the right hand, you'll see some of the basis in terms of why the board is responsible, as well as additional guidance in terms of what the board should be doing in terms of looking at, considering, approving, and then overseeing management with regards to a risk appetite. Now, when it comes to reporting to the board, typically what management needs to express is one of three things for each of those scenarios associated with the risk appetite, particularly the cyber risk appetite. And that's either whether the firm is exceeding risk appetite, whether it's within risk appetite, and I want to emphasize, very important, is approaching risk appetite. How many of you have had to work with a board of directors or report to a board of directors here? Okay, great. About half the audience here. So one of the things I learned early on in my career when I was coached to literally give my first presentation to a board is the rule that when you work with a board, there should be no surprises. So that's why approaching risk appetite is so important. When you're presenting to the board, whether it's a dashboard or you're actually having that conversation with the board, to highlight when you see emerging risk trends or issues, say, with controls that may increase the vulnerability exposure of your firm, that the board needs to be aware that you are approaching risk appetite, or there may be an emerging risk in general that the board needs to be aware of. Again, no surprises. So this is typically what we see in terms of these cyber risk appetite adherence reports. Are we exceeding? Are we within? Or are we getting close? Do we think we're trending towards actually approaching and exceeding? So the board is made aware of that. And then, of course, management has the responsibility of sharing with the board how they plan to address that emerging risk. So in terms of then building a cyber risk appetite statement, there are key principles. And again, I want to reference Jack Jones as well as the new NIST guidance in terms of what should be considered as part of developing that risk appetite statement. So in terms of risk appetite statements we've seen that actually are considered effective, we see that they have these kind of principles being followed, including aligning with business objectives. So they're not necessarily statements of technical or cyber nature. They're actually focused on achieving business goals and objectives. Certainly, of course, compliance with laws, regulations, and legal agreements. Setting boundaries and thresholds. We'll talk a little bit about KPIs, KRIs, KCIs. And then, of course, some other things here too, which I think for this audience is very self-explanatory. The one thing I want to emphasize, though, is this last one here. Making sure that the cyber risk appetite statement and the scenarios being considered include black swan and gray rhino scenarios. I think many of you, especially those of you who are CISOs here in the audience, have seen this. A lot of times firms tend to focus on risk and threats associated with what's well known. A great example, I think, of that is ransomware. I think all of us are aware of the risk of ransomware, the likelihood of ransomware impacting us. But there are other scenarios out there that could have even worse consequences to a firm. In the financial services industry, for example, the scenario that is of extreme concern is what we call data integrity attacks, in terms of the integrity and or the availability of critical information, such as customer account information, transactional information, and all, that the integrity and or availability of that information is diminished to the point that it's unrecoverable. That could have more extreme consequences to an institution than, say, a ransomware attack, where at least there's a possibility of being able to recover from that attack, or certainly being proactive in preventing that type of attack. So it's important that when you're developing the scenarios that you're not omitting scenarios that are low likelihood, but certainly could have a high impact on your organization. And I'm pretty sure this audience, all of you know what a black swan is. A more recent term is this gray rhino. And gray rhino, the way it's been explained to me, is there's a rhino out in the distance, and it's looking at you, and it's starting to come at you, and therefore you know it's a threat, but you're not doing anything with it. You're not actually dealing with the risk because it's a rhino. I've never dealt with a rhino before. No one else has dealt with a rhino before. So, I mean, do I really need to be worried about this or not? So again, that's a key thing, I think, in terms of cyber risk appetite being complete and effective. It has to include these low likelihood but high impact scenarios out there. And then at the beginning of our discussion, I talked about the importance of conveying expectations with a cyber risk appetite or risk appetite in general. And so again, I mean, there are key things that you want to consider in terms of once that cyber risk appetite or risk appetite in general has been established, how you share that throughout the organization so it's clear to everyone in terms of what the expectations are. So that's what we talk about, the importance of cascading, essentially from the board to senior leadership to operational management to arguably all personnel, making sure they're aware, what the firm's position is on certain scenarios in terms of risk appetite. And we've seen successful ways of doing this. We've seen how risk appetite statements are integrated into business strategy, product service strategy. We actually see it in the documentation, even in marketing material in terms of risk appetite statements. Also, we see it embedded in policies and risk objectives. It's actually great when you see a policy and the policy starts off reflecting back to the cyber risk appetite position of the firm, because that helps employees understand why these policies have been put in place, why certain controls or procedures are needed. It reflects back to the firm's cyber risk appetite thresholds. And then, of course, communication through measurement, KPIs, KRIs, and KCIs, which we'll talk about in a little bit. And finally, we're starting to see this too, adherence to risk appetite being embedded in performance reviews. So I don't think there's any better way of getting someone's focus on doing something than to have a consideration as part of your performance review. So we're starting to see that in terms of conveying, again, expectations for risk appetite adherence. Okay, so we just now covered the material that actually I covered at the RSAC online presentation last fall. And the feedback I got from that talk, which was shorter in length, was this is helpful overview, but hey, we really want to get some insights in terms of KPIs, KRIs, and thresholds. How do you find the right KPIs and KRIs for cyber risk appetite? How do you figure out thresholds? So I want to take a little time sharing that with you. So what you're looking at here, and I apologize again for the very small font. This is just my personal aggregated list of just all the KPIs, KRIs, KCIs I've seen over the years. And I tried to categorize them in a meaningful way in terms of KRIs and KPIs associated with threats and incidents. The one that seems to be very popular, vulnerability metrics. How vulnerable or how many open vulnerabilities are known in a firm. And then quite a few different types of information security control performance metrics, how well controls are working or not working. And then finally, policy, legal, and regulatory compliance, KPIs and KRIs. So quite a few there. Feel free to look through it, hopefully spark ideas in terms of KPIs and KRIs that you could use at your organization. But in talking particularly with members of board of directors, and I think, again, for the CISOs in the audience, I'm sure you've heard this frustration too. Boards as well as senior leadership have been frustrated, I think, with the extent of reporting on cyber risk and cyber risk exposure because of the reasons you see listed here on the right. That when they see these metrics, for example, or they see these reports, it seems scattered and not associated with actual business risk or anything that might be detrimental to achieving business goals. Again, I think the concept is that we're seeing metrics being presented, particularly to senior leadership and the board, that are a slice of the pie. They're the same part of the whole of, say, a firm's risk exposure or how the information security program is doing. And then also we're seeing a lot of concern in terms of with thresholds. And again, especially from a regulatory standpoint, there's no specific requirements in terms of what thresholds should be in terms of, especially for low risk adherence to certain scenarios and considerations. They're based on personal judgment. They're not based on actual rigorous, methodical, consistent risk analysis. So there's a lot of concern, I think, out there in terms of the adequacy of cyber risk reporting and adherence to risk appetite, particularly cyber risk appetite, with metrics and how those metrics are conveyed to leadership. So it's a challenge for us to figure out how to do better. So I want to share one of the things I've been working on personally in terms of how to approach this question, how to find the right metrics, how to convey it with value and meaning to leadership. So what I'm sharing with you is something I've been working on in terms of just trying to organize and categorize information in a meaningful way. And I would posit that when it comes to selecting KRIs and KPIs to present, especially to the board, and especially to show adherence with cyber risk appetite, there's 3 areas that you want to consider including. So first of all, you want to ensure that you have metrics associated with the firm's cyber risk exposure. Because leadership of the board needs to know in terms of, its dependencies, for example, to third-party vendors and all. How does that introduce a certain extent of cyber risk? What's going on from an overall external stress state exposure that could impact a firm's cyber risk exposure? I think an example of that, by the way, is what we all went through back in early 2021 with the start of the pandemic. Our risk exposure, I think, for everyone, went up significantly. A combination of suddenly everyone starting to work remotely, having remote access into internal systems, along with threat actors taking advantage of the stress environment. And I think we all saw the plethora of targeted phishing emails and spear phishing emails taking advantage of the pandemic situation to try and gain a foothold into firms. So, but you want to start with looking at what are the key risk indicators associated with these kinds of considerations here. And again, mentioning that popular metric we're seeing already, the extent of known vulnerabilities that the firm has. So that's the first set of metrics to consider. The second have to do with key performance indicator measurements that are associated with how the information security program is doing, as well as how controls are doing. And I think for this audience, these are pretty straightforward in terms of what we're looking for here. The one I want to emphasize down here, though, is key performance indicators associated with testing. I think we've all seen, especially for those of us who've been in security for over a decade, we've seen a shift in interest and focus from boards and leadership, from just, hey, do we have controls in place? Do we have an adequate information security program in place to deal with cyber risk? Because I think firms nowadays do have a full appreciation in terms of cyber risk and how problematic that could be to a company, especially if it experiences an incident. But the fundamental question now is, we've made all these investments in cyber controls and information security programs. How do we know these investments are effective? How do we know it's actually going to be able to handle effectively a more sophisticated ransomware attack? Or how do we know our controls actually will deal with these gray rhino and black swan scenarios, such as a data integrity attack? So you want to make sure that you have KPIs actually demonstrating your firm's preparedness to deal with these types of situations. And then the third set of metrics has to do with this concept of shock resilience. And I give credit to my colleagues at the Federal Reserve Bank of New York. They've been looking considerably at the association of stress environment and how firms, depending on their current financial condition, will adequately or not adequately deal with a sudden shock, such as a significant cyber incident. It could be a denial of service attack, a major ransomware event, a data integrity attack. And this is important because if you think of it this way, you can have a firm that may be very well prepared in terms of dealing with a cyber incident. They have very effective controls. They've tested it extensively through, say, like attack and penetration scenario testing and those types of things. But they could still potentially have an incident. And if that firm, for whatever reason, is being stressed in terms of low capital, in terms of maybe the incident would actually cause a liquidity issue and things like that. No matter how good the information security program is, the outcome could still have a material, if not catastrophic, impact on the firm. Versus the converse of that, you could potentially have a firm that is having a lot of issues associated with cyber preparedness, But if the outcome can be handled because there's significant capital reserves and capabilities in place, or the firm is prepared to deal with a liquidity stress issue, then the outcome will be very different. So I would suggest, again, these are the three areas that you want to cover in terms of the types of metrics that you're looking at and certainly presenting to management and the board to give a full picture in terms of your firm's overall cyber risk posture. Hopefully that makes sense. So what are the steps that are actually implementing and building a, say, cyber risk appetite program? So starting with, again, the thought that you have that discussion with the board in terms of, first of all, getting the board support to actually adopt a cyber risk appetite statement and thresholds and metrics. Getting the board support and approval for that really is the first step. From there, it's up to management in terms of identifying all scenarios that are pertinent to the firm based on what the firm does, services, the industry that the firm is in, just looking at that, and then doing consistent risk analysis. And I mentioned consistent risk analysis because, again, we've seen this issue associated with judgmental or bias-based determination of risk. It wasn't actually a risk assessment or risk analysis that made decisions. It was just personal judgment, which can be problematic and inconsistent. And again, also factoring in shock resilience, that third capability that firms have in terms of whether they can weather the storm financially or not if an incident happens. And then focusing, of course, on worst case loss likelihood and magnitude for each of the scenarios. So that's the idea in terms of management pulling together this full picture and putting that in a proposed cyber risk appetite statement with associated thresholds. It's then presented to the board as step two, and then the board will probably discuss it further with management, but then ultimately it's the board that signs off on that statement and associated thresholds. And then it's management's responsibility on a regular basis. Again, if you refer to 12 CFR Part 11, quarterly seems to be an adequate cycle for reporting on adherence. But management would go and report with metrics on each of those scenarios identified as to whether there's adherence associated with low, moderate, or high risk. So that, in a nutshell, is essentially the approach to take for implementing a cyber risk appetite capability. And finally, just to wrap some things up here a little bit, just some conceptual examples for how you could report in a meaningful way both risk exposure as well as cyber risk appetite adherence. So what you're looking at here is a classic likelihood versus impact chart, where the vertical, of course, here is the likelihood of an incident happening, and then the bottom here, in this particular case, we're looking at projected financial and operational losses associated with an incident. And what this chart shows, starting with these dotted lines, is how the firm, first of all, has figured out through risk analysis, the thresholds associated where something is going to become a significant financial loss event based on the number of records that are lost, as well as material. And by the way, hopefully your firms have already established, because this is a real accelerator for developing a cyber risk appetite capability. Your firm has figured out what is a significant loss versus a material loss, especially if you're a public company and have figured out material loss associated with compliance with Sarbanes-Oxley 404, versus a catastrophic loss in terms of the losses are so significant that it's unrecoverable. So you identify those, and you can display that here. This is the risk analysis curve that comes from, say, using a risk model approach like FAIR, Factor Analysis for Information Risk. And then the red here actually indicates the actual loss or number in the reporting period of lost records. So in this example here, for example, 4,000 records were lost. It was a breach of risk appetite because the risk appetite statement says that there is low tolerance for any type of loss of sensitive information. And so the total was 4,002 records, which indicates, yeah, there was an exceedance of risk appetite for this scenario. However, fortunately, it didn't breach significant or material financial losses. Then, of course, that's where the importance of looking at trending comes in, though. Is it still an emerging trend? Do we see it getting worse, or do we see it getting better? I'm sure the board will certainly ask that question. So that's one example. And then our other example here has to do with disruptions. It could be a denial of service attack, for example. So same type of analysis here. You've got an analysis curve here showing likelihood and then impact, not in terms of financial losses, but outage duration loss here. So this is the risk analysis curve that came from the risk assessment work done. You've got your thresholds here where the firm has actually identified at what point you have an outage of critical services that you'll start to have liquidity stress. At what point then you're going to see significant financial losses. And then finally, where do you reach that catastrophic point where losses are just unrecoverable. So, and then again, you report on in terms of what you're seeing here. Now, with this example here, the orange indicates the amount of outage time that was within risk appetite, which in this threshold case was 4 hours. However, you also had another incident here in which the duration was past, say, 4 hours, 6 hours, and then another one here that extended to 14 hours. So again, exceeding risk appetite, but fortunately not having an operational impact at that time. So hopefully this is helpful, an example of some of these kind of innovative ways that we've been thinking about how you can depict both risk exposure, risk likelihood, impact, and then mapping on top of that actual incident information to show whether the firm is adhering to its risk appetite or not. Okay, I want to take a quick pause here because I think, Manish, we have about how many minutes left? We have 3 minutes left. And I was just getting to the best slides. Shoot. Okay. All right, if you will indulge me, let me take 3 minutes because RSA has asked the presenters to talk a little about applying what you've learned today. So I wanted to show you essentially a thought experiment in terms of if I was, again, a chief information security officer and say all of you was the board of directors of a firm, and let's call ourselves Acme Co. And we have agreed to what we think is our cyber risk appetite considerations and thresholds. By the way, this is exactly the same as the one that I showed you earlier in our talk. But say we've agreed to this. This is what we consider to be low risk appetite tolerance, moderate, and high risk appetite tolerance. So what would I present to you in a meaningful way? By the way, this is very realistic because sometimes I think some CISOs will tell you, you only get a few minutes with the board, right? So let's see how I do here in terms of what I think are the 3 key slides, 3 key pieces of information I would want to convey to you. The first would be this slide here. What is our firm's current cyber risk exposure? On the left here, I would show you essentially a summary in terms of where I think we are. Are we in a typical normal state of cyber threat activity? Or are we seeing elevated activity? As we, I think, all saw, for example, at the offset of the Log4j vulnerability that hit a little more than a year ago. So we have that on the left in terms of just how I think we're doing. On the right, you're seeing a summary chart where we've actually gone through and we've identified all the different types of cyber incident scenarios. And we've identified out of the scenarios which ones we should be most concerned about, certainly from a financial materiality standpoint. And this may make sense to you. There's 2 that we highlight. Loss of critical operational information and business operations disruption or denial of service could have material, if not catastrophic losses. And then in my column here, I share with you a quick summary in terms of are we actually seeing any incidents associated with these scenario categories or not. Hey, by the way, if you're in the financial services industry, these categories should look familiar. There's several you can pick and choose from. These are actually from the Basel II operational risk categories, which is frequently seen and used in banking. So hopefully this first gives you an idea in terms of where we are right now in terms of our exposure, and even a little bit of an outlook in terms of how we think we're doing, say, in the next 3 to 6 months. That's the first. The second would be a dashboard like this, showing in terms of where we are in terms of cyber risk preparedness. How effective is our information security program? So on the left here, what I have essentially is a table summarizing where we are in terms of different control categories and capabilities. Again, for many of you, I'm sure this looks familiar because this is from the NIST CSF framework, albeit there are other frameworks that you could choose to use as well. And then the upper right-hand corner here, I have a summary in terms of how we're doing in terms of our programs and major projects in support of business goals and objectives. And then finally down here, because certainly in my personal experience, every time I had to present to the board, they're always asking the numbers. They want to know what's their essentially return on investment associated with the value of their investments in cyber controls in the program. So what I've created here is a summary chart based on, say, a model such as OpenFair, where I've identified where we think likelihood and impact are in terms of losses. And then down here, I actually show how I'm doing it from a budget standpoint. And of course, I have highlighted here in red the condition I think many of us are dealing with, that I'm not spending as much money on personnel as I had budgeted before because I'm having a challenge in terms of getting the personnel needed to complete the information security program. So that's the second slide right there, just showing preparedness, how we're doing, where we know we have issues and needs for improvement. And my third slide here is the slide which goes back to the whole topic of our discussion this morning, and that's cyber risk appetite adherence. How do you present how the firm is doing in terms of it? And a couple things I want to highlight real quick in terms of this table that you're seeing. First of all, what you're seeing here in the left column, this aligns back with our cyber risk appetite statement items here. So, whoops, L1 through L6, as well as some of the M's there, the moderates. Okay, so we have those actually associated here. And very important, we broke it down by business unit as well as through operation and technology departments. One of the problems or challenges in terms of reporting to the board is if you have to generalize it. You to take the entire situation with your firm and combine it literally into one column. You lose a lot of visibility in terms of, for example, where your issues are. Where do you need to improve? So the idea, for example, breaking it down by business unit as well as having operations and technology separate helps board and leadership better understand, are the issues not just, say, in the IT department, but also in certain business units. In this fake example here, you've got a business unit here that clearly looks like it's having issues adhering to cyber risk appetite, particularly in terms of protecting sensitive information. And then I just add these two analysis charts here that we covered earlier, again, to show the board in terms of what could be possible, and then what has actually happened, and whether or not that factors into cyber risk appetite adherence or not. Okay. So everyone, I think we're at time. I wish we had time for questions. I will be up here and available if you'd like to come up and talk or ask questions or anything like that. Otherwise, thank you so much, everyone, for coming this morning. Thank you. I hope you found this of value. Oh, absolutely.